Welcome to the Trading Lounge and the DayAhead report, and here we're looking at the Dow Jones on a 2-hour chart. We have been trending up for 9 days now, and that's quite a long time for a sustained short-term trend. So yeah, we need to bear that in mind. The other thing that we need to bear in mind too is the equinox, which is 21st, tomorrow. That's also known as a bit of a turning day as well in the market. So with our Elliott wave count, we've been looking at counting our little 5-wave structures up through here, and we're still expecting a new high to take out these highs here. The problem that I do have at the moment is that this wave 4 that we've been tracking through here, I think that it can get a little larger. I think that we could be looking for, as I've got this as an A and a B and a C here, I think that we're actually looking at this being, I'll just remove that for a moment. I think we could be looking at something like this here, a larger A, B, C correction through here. So an A wave and a B wave and a C wave through here. It may not be the case, but we need to be sort of prepared for that. And if we drill down into this little area through here, I'll give you my sort of reasoning for that. And this is it here on a 1-hour chart, but also this is a little bit complicated to work down through here. I took it as an ABC as a corrective pattern, but it could be read either way. But for an A wave, it doesn't really matter. The B wave here is really it could read as 5 waves, but it also reads quite nicely as a 3-wave structure, an A and a B and a C up to here. But what bothers me most is this little area through here, because this is definitely a 5-wave structure down through here and a 3-wave structure back up through there. So we'll have a look at that in a second. But if it drops below this support area here at the 61.8 here, so we could say, to be sort of safe about it, we could say the 13,550, as I mentioned in the report. So a move down here, or finding this as resistance here, could see a new low under the 13.5 here. So that 13,550 is quite critical. Let's just go and have a little look at this here, and so I can show you my sort of reasoning for that. So I've looking at this as an A wave and a B wave up to here, but as you can see here, we've got this little 5-wave structure through here. So nice 4th wave here, nice 3rd wave here, nice down for 1 and back for 2 here. So we've definitely got 5 waves down here, and you can also see that we've got 3 waves going back up through here, and that's quite easy to see as such in terms of the A, the B and the C here, and the C wave's also got 5 little waves in it here as well as a C wave, so that's correct. So that means that this is either down for 1, back for 2, and down for the 3rd wave here, or it's down for the A, the B and the C. Now, if it's going to be down for the A, B and C, then we'd need to be looking at it in terms of down for 1 here, back for 2, down for 3, 4 and 5. So we don't really, even though it's below the 13,550 here, we don't want to see it sort of retested here where it can't get back up here and then fail from here. Do you know what I mean? We need to see it get back and find support here, and then that can make that an A and a B and a C to here, and then work itself back up through here. So that's quite a sort of a critical point, that 13,550 there, and this also rings true for the S&P 500. We're looking at it being a 4th wave here, and that's the trouble with 4th waves. Like waves 1s and 2s are quite tricky, quite simple. Wave 2s are normally sharp and simple, where wave 4s are normally sideways and complicated. So we're figuring on this being the wave 4 to here, but now, even though we haven't made new lows here, I'm looking at all this structure in here, and it does present the possibility of being a corrective wave back up, which would bring us back into close to the 1450 through here. It may not be the case, but I'm just pointing out that there's possible weakness coming in, and we need to watch our price points to see what's valid and not. Now, the S&P 500 didn't move up as much as the Dow Jones did, which is the broader market as such. 500 companies and the Dow's only 30 companies. So that's a bit of a telling point in the advanced decline area. And also the volume is low. It was quite low on this move up through here as well, in compared to what's going on. And once again, we've also had 9 days coming up through here, including these two, by the way. So is it? No, maybe not. I need to check. But either way, it's it's up that top end there. So we need to be careful about that, and that's drilling into into the 1 hour chart on the S&P 500. The important things here, though, is that in terms of the levels, is subgroup 2, which is 65, which is this level here, 1465, 72, and 80 here. So that's subgroup 2, and we can see here that the price came up, hit our target, which is fine, and we're waiting for the wave 4 to come back. We know wave 4s are complicated and messy and those sort of things, so we've been doing our best to work through them. However, it hasn't gotten back up into group 2 yet, into this 65 here. So until it does that, then the bias is for a softer market, even though it could move up into there, but you wouldn't take any long positions until we had support into the 65 at least. So and why it doesn't have support there, and it's retested it twice here, so it's got nice support here too, but it can come back to the 1450 at this stage here. So basically an A wave, a B wave into here, and a C wave back down through to here could certainly be on the card. So just got to sort of stay with that and work that through a little bit. The European markets have got the same sort of pattern as you can see here as well. This is the UK 100, which is it's the same, doing the same thing as the Dow Jones, but in the bigger picture, it's slightly different from the DAX because it spent more time here at the 5.8 here. So look, we're labelling this as a wave 4 here, but we would certainly need to see it push up above the 5.9 through here. Otherwise, we're going to end up with an A and a B and a C wave back into here somewhere, and then looking for a push to the upside there, because we don't have a completed 5-wave structure up through here yet, but it is struggling through here as we can see. So we'll just give it a bit more time. Yes, but it has made the whole sort of September trading period very sort of brief, really, with these pauses in the market. The Australian market, once again, here is actually looking a bit better than the other ones, because the base metals are sort of creeping to the upside, and we'll talk about those next. But as you can see here, we've just the main point here is that we're working with the 4,300, which is the top of minor group 1, and the wave count that we're looking for is to get us up to 4.5 here. And in that sort of process there, we're looking at this particular structure here. We're looking at this as being wave 1 to here, wave 2 to here, and then we're going to the wave 3 here. In the wave 3, there will be 5 waves in the wave 3, always along, not always, but 90-odd% longest and strongest most of the time. So as the wave 3 in here is the same as well. So a bit of a smaller micro pattern, fractal pattern of the larger pattern, but basically up for 1 and back for 2, up for 3, back for 4, and up for 5 here, which is not complete. There'll be 5 waves in here as well, so up for the 1, 2, 3, 4, and looking for a 5th wave up here above the top of the 3rd wave here. So this does bring us into group 1 here. So but it's good though, because it's made that effort to move up there and find support there. Will it stay there? I don't know, but as long as the market stays above this 43.72 there, then the market is positive to the upside, because we don't have overlapping wave structures within wave 1 here at this stage, nor this one as well. So let's just see. Now, you know that trading in group 1 here, subgroup 1, is going to be the resistance area. So if support is ever found on the 44.30, the top of group 1, then we'll be pushing to the upside from that. But you always need to expect that a correction to unfold. So what we're looking for here is the arrival, the reaction, the support, the first high above the level here, but being held down by the subgroup 1 area here, and then seeing this larger wave 4 come into play here, which can move back to the wave 4 of one lesser degree, or the 38.2 retracement level from this period here to wherever that top bid is through there. So if we put that somewhere just in there somewhere, we'll see that as so it can, as you can see here, it can pull back to the 43.80 here. That's, you know, in this area through here, so that could actually come back down through here. So looking for a small push up through here to make a new high, and then back down again through here. But once again, you're dealing with a whole number through here, a large number. So it just, you know, it's not going to run very far at all. Let's have a look at commodities, which will be the sort of catalyst for price movement here. Thought I'd start with oil, and this is a daily chart here, and what we're looking for here is the larger triangle pattern through here, which is which you can see on the weekly charts anyway, but basically the A wave to here, the B wave, the C wave, the D wave, and the E wave through here. So a triangle is five waves, the A, B, C, D, E, and each structure within the triangle is 3 waves each. So in this case, the A, the B, and the C. So if we're looking down from the D wave to the E wave here, we'll also be looking at 3 waves as well. So we'll be looking at something like the A wave to here, like that, the B wave, which will be in 3 waves, so just imagine that's in 3 waves, and this A wave here is in 5, this B wave's in 3, and then the C wave coming down through here will be in 5 waves as well. So that's kind of what we're looking at through here. It may not come back that far, it may come down to here, but we'd normally be looking at the 61.8 retracement level from this section through here. So we'd be looking yeah, it's about right. So into this area through here. Now, obviously, the 90 is the closest, largest number through here. So that's going to see the price sort of vibrate across that there in a variety of patterns. But what we're looking for here essentially is we're looking for 5 waves down in this A wave through here, and that will we're sort of into the 3rd wave. So you can just imagine the 3rd wave being into the 90, and then the 4th wave and the 5th wave. So just looking at that intraday level there, we can see that this would be the 3rd wave coming down through in this section through here. So the 1, the 2, the 3, the 4, and the 5 for the 3rd wave. Then there'll be the 4th and the 5th wave through to here. So a bit of bouncing around the 90 through here. So yeah, further down there, we've got a couple of shorts on. So it's all good there. The copper market, the base metals and precious metals have got the same sort of pattern, and we're looking. Our target is higher ground up at the 400 here. The precious metals as well would be sort of up at the 1800. But what I just want to point out for is that with all trends of all different degrees, and there's about 12 degrees using Elliott, and that's a little bit debatable as well. But it doesn't really matter. What the point is that each trend, the same as a correction, has a beginning, a middle, and an end, and this. The middle is normally the strongest part, well, normally in stocks within a trend, but metals or commodities have extensions in the 5th wave rather than the 3rd wave, like this 3rd wave here. But the point being is that in this case we do have the extension in the 3rd wave here. So we've got these series of 1s and 2s and 1s and 2s, and this is the 3rd wave through here. So what we're going to be seeing next is we're going to see a series of 4s, like here, the 4s and 5s and 4s and 5s. So we pretty much can grab this type of price action here and consider this, 4s and 5s, and pretty much tack it on to the end of the trend here to get the slowing down. This is the beginning, the middle, and the end here. So we'll be seeing that sort of come up through here. So as you can see in wave 1s and 2s here, you can see a lot of overlapping wave structures within here. This structure here overlapping this one here. So it's a slow edging process to the upside. So that's kind of what we're kind of considering through here as well. And this trend up is much the same as in gold, of course. This is the daily price pattern here, though. So you can see that we've got, once again, we've got the beginning here, the middle through here and the ending through here. Now, the subgroup 2 here, especially the 1772 here, is still playing out, but the 1800 is a profit-taking number, so it's it's going to be seeing wave 3s and 4s and 5s as well. So yeah, it's slowing down. I know this is a little bit. We had a bit of complication through here, but it's probably easier if we look at it in the fixed price here. So you can see here that it's the same pattern we got to the upside, but it's a little bit cleaner from the low here. We've got this move straight up through here, then a corrective wave back through here, and then it's building through this process here. So you can really see it, moving in the third wave through here. And even when we have a look at the this CBO here in the same gold pattern as well. So we've got this up for one here from the beginning of May. So we still can see here that this has still got further to push to the upside here in this particular market here, this gold index here. Okay, so yeah, but as you know, we're just having, it's going to have problems at the subgroup 2 area in there, and this is just drilling down into the hourly chart here. And that, as you can see now, a couple of things here is that we were looking at this as a small fourth wave coming back, so that's done its thing. So we can actually see 5 waves up through here now. And the important thing is that it's made a new high here. So we've got that 1, 2, a nice simple wave 2 here, the third wave, then the A, the B, and the C for the 4th wave, and then up for the 5th wave here. So we're going to see another correction unfold through here. But this is and it's just going to continue like that as well. And that's why. This is why that 1772 here, this whole subgroup 2 area here is so important. And it's still got a lot more to play out. We haven't finished with it yet. We're going to be seeing a lot more of it in the future. Even when we hit 1800 up here, we're going to see it come back and use it as support as well. So what I'm trying to say with the base metals is that yes, they will edge higher in their own way. They'll take time because they're in those 4th and 5th waves. But the base metals and the precious metals, they will support the Australian market pushing higher, but it's going to be a slow slog. That's what I'm trying to say. So no sort of runaway trends as such. Once we've got a big correction on the 1800 here, a good solid correction that finds support here after about a minimum of 3 big swings here, then we can move in, take some long-term trades there. But you're better off doing that with stock, because holding a CFD, over a few weeks is, probably over 5 weeks would be better off getting a margin loan, So the CFDs are good for short-term trading or holding long-term short positions to get the edge from the overnight financing. Okay, so let's have a look at the currencies. Okay, the US dollar here. No change really in any of our wave counts and directions and so forth. The little wave 4 here that we're looking at through here is unfolding. What we do need to, it does appear to be a little bit small for what it is. And it hasn't retested the 80 yet, but it can do that from either the 79 or normally from the 78, but either one of the two. Let's have a little look at this situation in here. The trend is still down. We're just looking at this sort of rally here, the same with the euro to the upside. So it's just a matter of working out the wave 4 corrections. And as we know, wave 4s are not, can get complicated. That's the thing with them. So this is the little wave 4 here that we were looking for, just off here, and that's sort of it there really. But what I was sort of thinking is that we'll drill into this in a moment here, and we'll pull this apart here, because it does make a nice ABC. So we could actually put that in this structure here. When we pull it apart in a moment, you'll see that it's possible to put that there. But also with wave 4s is that they can get a little bit tricky. So we could be seeing a larger ABC pattern, which would give us something like this here, coming back into this area through here, there, and then moving to the downside after that. So that's what we don't know. We don't know if we're going to move down from there, or we're going to be moving down from basically from here down through to here. But either way, there's going to be support on the 79 as well through here. So, and yesterday we were talking about finding support on the, if support was found on top of group 1, which is 79.30, then you can look to the upside. If not, well, then we'll be looking to the downside. But so the next story is that we do have, I mean, we just go back over, we do have this move up through here, which does count very nicely as an ABC correction. I'll point that out in a minute. So we could be getting that just as an A wave, a B wave, and a C wave to there. But if the 79 here becomes a retested resistance, then the bias would be to the downside through here. So just bear that in mind, subtle but important. So this is the actual correction here on the 1 hour chart here. So I'll just go through this. This is little A, B, and little 5 waves in the C wave here to make the A wave, then the B wave to down here, and then the C wave has got 5 waves in it, the 1, the 2, a bit messy in here, but the 3rd, the 4th, and the 5th wave here to make the C, and I'm thinking it could just be the A wave here, so then the B wave here being sharp like the B wave here, and then would see a C wave up here, and a C wave up here would be in 5 waves, so it would be another picture of this one here over here. And normally in ABC corrections there's normally some sort of equality in terms of the same distance and so forth. So, you know, we'd be seeing something like that coming in here as such here. So we'd be looking at that moving up there in 5 waves. So anyway, that's that really. So if the 79 does become the retested resistance here and fails from there, then then the bias would be that the trend is continuing to the downside and would consider that the wave 4 there. Now, this is the same for the euro to the upside as well. So when we're looking at the euro here, we're looking at it at having a wave 4 back as well. It's had the overshoot pattern through here, so we would normally expect it to come back. The equal distance above would be the equal distance below, but it's not doing that at the moment, and it can do it, and that way would put the wave 4, if that was going to be the case, we'd see it come back down here, then back up, then across here, and basically sort of work a triangle pattern into that 130 there. Once that's completed, if it finds support, then the next trade would be to the upside. But yeah, so you just got to be careful because you make money in trends and give them back in corrections. It's just the cycle. So, but that said, this overshoot pattern just shooting straight up here and, you know, coming back down through here and working across there, that's fine. But it didn't really do it here at the 125 here. So we'll bear that in mind as well. And this is where the 79 as support or resistance in the US dollar would make the difference here. But let's just drill in here and have a little look at this to the upside. So we've got this first swing down through here, and we'd expect to bounce off the 130 as well. Do you know what I mean? So it's always a game of supply and demand, support and resistance, and those two battling it out. So, you know, the battleground now is the 131 here. That's where the supply is in here, and we can see that testing in there as well. So it's come down, it's found demand, gone back up, found supply. So, you know, it's going to be bouncing around in here. So just give it some time, depending on the degree of structure that you're trading, of course. But trading around whole numbers is a little bit dangerous. You're better off waiting for them to mature and then work out where to get in from that point. But as I mentioned down here as well, we had that that move above there, and it really just found support here. So if that's the case here, if we start to see something like that, then we'll know where we are here, and that's certainly possible. So we just need to give it a bit more time. That's all. It's further in here. I mean, if you're trading in the sub-level degree, well then, you know, that's a different kettle of fish altogether at that stage. So anyway, the Australian dollar, there's a couple of ways to count this, and I'm counting it in a different way in the morning section here. But on the charts, you'll see it up for wave 1, an A and a B and a C for wave 2 here, and then moving up through there. But I'll just stay with this count here for the time being. It's always good when you're using Elliott to explore all the possible counts, put them on the table, and as the market unfolds, you reduce them, just eliminate them one by one. But it is important to, you know, have them all sitting on the table. So that's why we do that. but in the bigger picture with the trading levels concept is that we're basically having a correction across the 105 here, 5 being the second strongest number. It's really going to be a magnet to that price there, and we're seeing that, and that will continue to do that. And we're going to have this does appear to be in 5 waves down here, so we should see some sort of corrective wave. The 61.8 would be up here somewhere, but of course it can fail at the 105 here and move down from that point there. Don't worry about that trend line there. But so we're looking basically at a swing down, swing up, and a swing across here, and then eventually finding support. And if that's the case, and also remember too that it's really good if we do get a big correction in this area through here, because the bigger the correction, then the safer the next trend to the upside. Because the correction is the foundation, it's the accumulation process of the demand side, and it's just such a good place to to build a trade from, and trends are engineered from the corrective process. So understanding that and the trading levels really help with the timing of entering the trade. So and as far as that's concerned, this is the first high above the level, and we'll be looking at some type of 3 swings across here. They could be swings where this B wave fails right here, and then it moves down into the next. This is support 1, this is support 2 here. That's where the demand was before, so that's where they'll go to this time. So we can go to the A, the B to here, or the B to the 61.8% mark through here, then down to the downside, either to here or down further into here. So it's just a little bit unknown, so just be a little bit careful in that regard there. Okay, so that's just it on the daily chart here, and you can see that it's it's swinging across here. So it's good to, after this move to the upside, it's doing its correction. So just leave it be, and we'll pick up the thread from there. Just with the Australian market as well, yesterday we were talking, this is the XJO here, we were talking yesterday that this little bar in here had nice support volume in through here, softer here, good strong volume in here, softer volume here, so we knew there was a correction. This is a correction, but we knew there was support there because of the extra volume here. So yesterday we've had nice volume here to the upside through here. So that support is in there now, and we would be expecting a new high in the futures market. It hasn't happened yet. The cash is leading the futures, so we'll see how that sort of pans out there. In the weekly cycle of things, Thursday can be the bear day. It doesn't sort of look like it with the Dow being up, but just bear that in mind. And if it is a bear day today in some regard, what we're actually looking for is it being softer, but on lower volume. So if it is down, but down on lower volume, then we know it's bullish. And the important thing here is that if it is lower volume and down, then we know that we've got a good chance of having Friday and Monday as the bull days, right? So that will give us some that last push for our long trades going around to the Tuesday again. So it's always the same case in a bullish cycle to the upside, is that and Monday holds the record for being the biggest bullish day. So if grabbing that Friday and Monday as strong strong trading days, strong ranges, then that's where really the profit comes into the trading, and then it's really about navigating through the Tuesday, Wednesday, and Thursday. So yeah, alrighty, that's it. So good morning and good luck.